President Biden said Thursday that inflation in the U.S. is lower than other countries around the world. The president also claimed the U.S. is better positioned to deal with rising prices.
I can understand why the American people are frustrated because of inflation. But inflation is higher in almost every other country. Prices at the pump are higher in almost every other country. We're better positioned to deal with this than anyone, but we have a way to go.
For more on this, I want to bring in David Nelson. He's the chief strategist at Belpointe Asset Management. So, David, what do you make of the president's remarks? Is the U.S. really in a better place to tackle record high inflation?
We certainly have the tools, but even if what he said was true, I'm not sure Americans would care. Unlike other countries, we have the ability to be energy independent, and we no longer are. Right now, consumer inflation, we're at 8%. That's about, that's the 40-year high. Energy touches every line item of the income statement. I don't care if you're an industrial complex, you're running a small business, or you're pulling up to the pumps. It's hitting your bottom line, and that hits almost everything that you purchase. And then again, you go for a raise, you try to increase your standard of living, and the cycle feeds on itself. Add the fact that you have a raging war in Ukraine, and some of the sanctions against Putin don't seem to be having the desired effect. He seems to have found new customers in India, and China are buying up all the oil they can, and that, of course, feeds into the problem.
Yeah, when you see those prices at the gas station or the grocery store, you're not really thinking about how much it costs in another country. Federal Reserve Chairman, I want to ask you something about what the Federal Reserve Chairman Jerome Powell has been saying about inflation. Let's listen to something he recently said.
So we've been in that world where inflation was really not a problem in most of the advanced economies most of the time. Since the pandemic, we've been living in a world where the economy is being driven by very different forces, and we know that. What we don't know is whether we'll be going back to something that looks more like, or a little bit like, what we had before.
So do you get a sense from what he's saying there that high inflation could become a permanent part of the economy? And if so, how would that affect consumer spending, which really does drive the American economy?
It'll certainly be a drag on consumer spending, and I would agree with the fact that inflation is likely to be higher than in past years. Unfortunately for the Fed, they can only handle one side of it, monetary policy, and that can take care of some of the demand. But the other side of it is the supply side. I think that's what he's referring to. Until we repair the supply chains that have been fractured coming out of COVID, inflation is going to be with us for quite some time. And that's not just a U.S. problem. That's a worldwide problem.
All right. So meanwhile, there's a new report out that indicates that the average price of a home is still rising, but it's rising at a slower rate than it was before. Are you worried at all that this could slow down the economy?
It's a big part of the economy, and it certainly will. Home affordability is literally off the charts. Mortgage rates have doubled in just the last 9 months. We're at the highest level since probably 2008, and it feeds almost into everything. Eventually, housing prices will start to come down, but that'll mean reduced economic activity as well.
So I want to ask you about the stock market, because a lot of people are checking their 401k balance and they're in for a real shock. This has been the worst start to a year for stocks in more than half a century. Do you think we have more rough road ahead?
It's a challenge, and I'll be the first to tell you it's a process. And we know we're at the bottom. When we look back, 6 months from now, we can see it. We're probably not there yet. I think the biggest change in dynamic over the last few weeks is the shift in sentiment has been from worrying about inflation to worrying about a recession. And the administration and economists are debating whether or not we're in a recession. I think stocks have already made that decision. They're a pretty good leading indicator of economic activity. We're likely in one already or about to go into one. The question is just how severe it will be.
And of course, the advice is always, if you don't need the money right now, don't make any big changes, and hopefully the market will come back. All right, David Nelson, thank you so much. We appreciate it.
Thank you.